This was the week the bid got pulled out from under crypto, and the week we found out how much leverage was hiding underneath. Bitcoin gave back its bounce. A corner of the strategy-style credit market cracked for the first time, and Wall Street kept building crypto rails straight through the bleed. Start with Bitcoin because it set the tone. It walked into the week still trying to base above its 200-week moving average, the level that's marked the floor in most past cycles. It held early. Then Wednesday's Fed meeting hit and the floor gave way. By Friday, Bitcoin had fallen below $63,000, a fourth straight down day, and the entire prior week's bounce gone. Options desks told the same story. Traders were buying downside protection all the way down to $52,000, positioning for the slide to keep going. The driver was macro, and it came as a 1-2 punch. First, the Fed. It held rates, but new chair Kevin Warsh used his debut to sound deliberately hawkish, fewer cuts, higher for longer, and risk assets sold off. Crypto, sitting at the high beta end of risk, led the way down. Second, the geopolitics unwound the other direction. The Iran deal got signed and oil dropped 9%, pulling out the safe haven bid that had quietly been supporting Bitcoin. Take away the fear trade, and a lot of the recent strength went with it. And that's exactly where the crypto native story starts, because the sell-off exposed leverage that had been building in plain sight. The flashpoint was STRC, the dividend-paying preferred stock from Strategy, along with a similar instrument called SATA. Both got hit in a sharp sell-off that Strive's CEO pinned on forced selling from leveraged investors. They rebounded by the close, but the message landed. The strategy playbook, borrow against Bitcoin, issue yield instruments, repeat, just took its first real stress test of the cycle. And the timing is the whole point. Only days earlier, Bitmine was bringing that same playbook to Ethereum, and a French company, Capital B, was copying it across Europe. Everyone's adopting the model right as the model shows its first crack. Underneath that, the miners are quietly capitulating. Bitcoin has now traded below the average cost to mine it for 5 months straight. Roughly 20% of miners are running at a loss, and public miners sold more than 32,000 Bitcoin in the first quarter alone, more than they offloaded in all of 2025. When the people producing the asset turn into net sellers, that's supply pressure that never shows up in a single day's price. Now here's the part that doesn't fit the gloom. While traders were selling the asset, Wall Street spent the week building the rails. Coinbase announced 1-to-1 backed tokenized U.S. stocks that pay automatic dividends. The SEC approved T. Rowe Price's active crypto ETF. Franklin Templeton proposed funds that turn corporate dividends into Bitcoin. And both State Street and Fidelity launched money market funds for stablecoin reserves under the Genius Act. That is not the behavior of institutions heading for the exits. The price bled and the infrastructure boomed in the same 5 days. A few more threads worth your radar. Ethereum's foundation lost another leader. Co-executive director Xiaowei Wang resigned, following Tomasz Stańczak out the door, and the exodus at the top of the EF is now a pattern, not a coincidence. On enforcement, former Celsius CEO Alex Mashinsky was formally banned by the CFTC, closing the book on one of the last cycle's biggest blowups. And regulators kept tightening overseas. Singapore flagged Bybit on its investor alert list, and Greece looks set to reject Binance's European license, putting its EU access at risk. The one green name in the wreckage was Stellar, which actually climbed on the week while the broader index fell, but one coin moving up doesn't make a trend. Looking ahead, the question that hangs over next week is simple. Was the STRC stress a one-off shakeout or the first domino in the leverage stack? Watch whether Bitcoin can hold this level and whether those credit instruments stay calm under another down day. Because here's the tension this week leaves us with. The people who build crypto's plumbing spent the week doubling down. The people who trade it spent the week backing away. One of those groups is early, the other is right. We just don't know which yet. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.